my screen right now. I will go through the process with you one more time. And then after the macro fundamentals, we're gonna spar. In other words, we're gonna trade the marketplace.
Okay.
And whilst you're in there, open up your demo account, or if you're comfortable, or if you're confident, then open up your real account. Alrighty. So in terms of macro fundamentals of things, so this is definitely the first step we need to look for in the 57 minutes time. So about midday. Hi, Ann.
Hi.
We have the
Hey,
import price
Hi,
index
Jason.
based in Germany, but it is medium. But we have the consumer confidence survey. It's pretty much medium, and the Swiss and the UBS consumption indicator. So less than an hour. Then there's another, the KOF leading indicator. And then that is it pretty much. Then you have the GDP for the pound, 3 hours and 26 minutes. Okay, so those are the things that we need to look for. And just to double check with Forex Factory, you can see through there 3 a.m. Swiss, so that's midnight. JFK, German consumer climate, and the KOF, that's in the medium, and they have the current count, pretty much it's about 2:30 our time, and final GDP. See, and then the euro, and the Italian 10-year bond as well. Hence, that's why I believe the euro dropped a little bit. Let's have a quick look. Yeah, so this is what I'm looking for, is can they break that based on the daily. It's a really good level of demand at the moment, but I don't like this currently what's forming. So from there, and all of a sudden, bam, it can be tanked. It all depends on whatever news that might happen. But if not, then it can go all the way back up to 129, but can definitely have a look at that later on. Okay, moving on. In terms on the next step is now looking at the macro fundamental of things, the dollar index, and you can see here from yesterday's doji, still another uncertainty. They don't know where the dollar is going to head towards to, but in the level of supply. It's pretty much still in an uptrend from a higher high, higher low perspective. Can they break that high to go to a new high? Yeah, absolutely, they can be able to do that. So, in terms of that, let's go through looking at, here's on the futures, the same thing, uncertainty. And you can see through, sorry, go back on the dollar index based on this one first. Yeah, so it's the same, pretty much from the same chart. It's currently struggling, and if it doesn't want to supersede and surpass at 83.16, that is going to fail, definitely. And that means as well that the markets can continue to go to the upside and create a new higher high somewhere sometime. So everything's pretty much out of whack at the moment, and yeah, you just have to keep an eye on what the market's pretty much doing at the moment. Okay, and then we're going to start scrubbing the market, but for the next 25 minutes, about 30 minutes, pretty much we're going to choose a pair, and we're going to do a practice run, basically trade, and I'm going to keep on passing side by side just to see what you guys are doing, giving you some pointers and see where you're doing correctly in terms of MTFA. Alrighty, any questions in terms of the exercise?
Is this momentum trade or?
Yeah. So
Okay.
you have 30, pretty much we got 30 minutes, 25 to 30 minutes of pure training or trading. Any questions, Jason, on what you'll be doing or what you'll be doing?
So we're trading on the 30-minute time frame.
And that's where I need to see what your plan is. So, but for the goal is mainly just for the next 30 minutes, you'll be trading and see if you'll be profiting or if you're going to enter a trade, you go long, go short, or you don't do anything. So I want to see what your plan is.
Okay.
Alrighty. Then I'm going to mute myself and let's begin. But I'm going to pass through and, switching one after the other. Alright,
Cool.
guys. I will see you then. Ciao. Oh, hi, Tony. You just basically came in. What we're doing for the next 20 minutes, well, 25 to 30 minutes is to trade the marketplace, and I'll be going through one into each other and see what you guys are up to. So that is the plan for the next 30 minutes.
Okay, very good.
All right. Mm, right, nice.
Oh, you want me to show my screen?
Yes, please, Tony.
Okay. Um, okay. How do you want me to begin?
I just want to look on what you're doing. Just imagine, pretend that I'm not here or not everyone's there. I just want to see what you're doing.
Okay.
And
All
then
right.
I'm going to give you some pointers and stuff. And
All right.
so you're competing
Um,
with the marketplace, and I'm just sitting on the sidelines, and I just want to see what you're up to.
okay.
Okay.
Okay. Let me explain a bit what I'm doing right now, basically. I saw a news that tomorrow is the option. There's some options expired for the currency pair.
Sorry, Tiny. For the next, you only have 15-20 minutes left. So either you trade based on a demo or on a real account. I want to see real live trading. I just want to see what you're doing. So just imagine I'm not around. Just
Okay.
do what you're doing, like in terms of trading. I want to have a look. Okay, so I'll mute myself, and then
Okay.
yeah, I'm gonna go through within the room and see what everybody's doing, whether if they're doing things correctly or not. So you have less than
Okay.
20 minutes left of trading. Okay,
Um,
I'm gonna keep looking, passing the screen around. Okay, so just keep on doing what you're doing, Tony. What we're doing today for the next pretty much 30 minutes is just pure trading.
okay. Let me switch to my demo account then.
Yes, no problem.
Yeah.
All right, 3 more minutes left. 3 minutes, and we're going to discuss it. 3 more minutes. Okie dokie. Right. Well, how we're gonna do this? First, I will help Jason, and I'm gonna look at Anne, and then last will be Tony, and then we're gonna help Tony a little bit with his trading using the M3 method. All right. So Jason, tell us what the plan was.
Well, initially it was in a level of demand right about here, and I went long, and then it reversed and came back down on me and stopped me out. So then I went short, and then it stopped moving to the downside and ended up going long again. I was looking at the 5-minute chart, and I was right here when I went short, and my target was like right here, or to be in profit because of the spread, and then it started moving to the upside again like it was. So I lost 3 times. I just stayed out of the market because I was just losing money.
Okie dokie. I saw you put draw your primary or downtrend line, please.
So there's my primary, and then
That red bar didn't exist before, right? So let's, if you're gonna draw it, where will you draw it at?
right here.
Bingo. All right, so there's 1 or 2, and the high almost touched the 94.80. Notice how. Oh, actually, before I tell you, I'll give you all the answers. What do you think was the learning curve based on that exercise and what you've done?
I honestly don't know because I think I was chasing the market for a little bit there on most of these. I thought I had a good setup right about this area right here.
Mm-hmm. What was the initial buying price?
I can't remember.
Can you, if you right-click it, please, Jason? Right-click and then show trading information. Go for the top. So trading history.
Oh.
Okay, so there we go. So you bought over there, you bought 2 times, and then you basically sold it on that. You sold the first one, then you sold the second one, so minus 3.4, then minus 6.1, right, and then basically shorted it. And can you click on where it says minus 6.1? Interesting. Why is that value right there? Can you go through the? Let me go through the first arrow first, please. The first arrow pointing to the upside. Okay. Okay. You're in number 5. Can you just go to me? Go to me in 1 minute chart for me for now, please. All right. Okay. So you bought on that red bar. Okay. Click on the upward arrow, please. Okay, that one, so 1, and you closed when it went to the downside, and that is basically because of the spread, okay? So, and then click the third arrow, just showing to the upside, and you shorted based on, so you went long and you closed that position based on that one. Okay, interesting. All right, so definitely I know what your deficit is. We definitely need to work on your MTFA. Looking at multiple time frame analysis. So if you go towards, because so you have half an hour, right? Go to a maximum of 1 hour. Go to a maximum of 1 hour. Notice who's in control, the buyers or sellers.
Sellers right here.
Bingo. Okay, sellers are in control. So if on the bigger time frame sellers in control, what are the probability that it can continue to drop further based on a 1 hourly chart?
High.
Okay, sweet. Go to the 30-minute chart. 30 minutes, beautiful uptrend, and you're sitting pretty much just dead set where the trend is, right? You're in a dangerous territory. Yes, there could be a probability that a new continuation of the trend was to continue to the upside. Now go to the 15-minute chart. Still, we have a lower low scenario, lower high scenario, and then I saw that and I said, oh, okay, that looks good. Now, notice as well, part of your primary and secondary. There's 15 minutes in before that price will continue, right, or before that the candle will finish. So I saw you entered, fantastic, no fear. Go back to, and then go to a lower time frame, the 5-minute chart. And then that doji happened. So there's a stability. And then out of nowhere, the price tried to push all the way to 94.80. It didn't want to. So you're looking at it, and the price started to drop. So I could have easily said something like, why don't you want to close it? But I just want to see how you react to the marketplace. When it kept actually dropping, you didn't do anything about it. There's some form of hesitation. What was the actual thought or emotion that was in place? Why hesitate, like in terms of closing your trade straight away?
I don't remember. I mean, I don't even remember which part that was. There's so many of them. I mean, it was all like, well, is it gonna come down to the uptrend line and then come back up and make a new higher high, or and then I saw how long that candle was, and then that's when I got out. But it was too late. I already lost that 6 pips.
Gotcha. Are you tired at the moment?
Yeah, I'm tired.
Are you frustrated at the moment?
Yes, I'm frustrated.
Yeah, I can see that, right? Now, in terms of a trend, what's the definition of a downtrend?
Lower lows and lower highs.
What did this, where the 6.1 arrow is, what did it form?
I formed a lower high.
Correct. So lower high, and that's from perspective. Basically, drop. And now my other question to you is, why did you close at minus 4.4, the last one? Because you're shorted.
This one I went long on, and then this candle. Let me see.
Yeah, I believe
Oh, I
we
think it got
closed it.
stopped out.
Okay, got
Yeah,
it,
it
got
was
it, got it.
stopped.
Okay, not a problem. So definitely where there's I can see what your deficit is because this is gonna if you replicate it on a bigger time frame it shouldn't change, right? The speed is just faster, that's all. It goes every 5 minutes. All right, perfect. Please write
Right.
down
So
what you learned today. Um, Mainly from a lower low perspective to the lower high, selling it, and the next part of the movement is a lower low. Since the bigger time frame is saying the sellers are in control, that the probability that there's a continuation to the downside is highly probable, then you cannot go long. If something is too
so
strong, yeah, you cannot go against the tide.
right. So if we're on the intraday charts like this, we still check the 1 hour on the bigger time frame.
Yeah, because
Even
pretty much the time frame is from 11. When we started, it was almost from 11 o'clock till about 11:30, 11:35 for half an hour. So you need to see that within that time frame of that 1 hour. What is the trend on the 1 hour? Who's in control in the last hour? Because if someone is in control the last hour, like say in this particular case, sellers are in control. If that was bullish, by all means you can go long. But if the last hour is bearish, you cannot fight against that because you
okay.
have another 1 hour before that will continue, will finish. If basically by the end of the hour now the closing price is within the gap of the uptrend and the downtrend, then it's from a higher high, higher low perspective, and it's going to go continue to 95, but it doesn't want to. And talking about that, um, in terms of your dollar yen earlier too, yeah, it could go even further, get a much better price in terms of the trade. But personally, I wasn't convinced that it could go further because it's a doji. I wanted the price to go to a certain price. If the price of the dollar against the yen went to 95, then I would leave my trade, but it didn't want to go there, right? It's just sitting within the bay area, and still the sellers are in control on the bigger time frame. So hence, to replicate that on the smaller time frame, you can see there that in terms of the bears currently in control, you have 30 minutes of trading. The probability that the bears will continue to the downside is more than likely to happen. Obviously, it has to correct itself, which is pretty much what it did, creating a lower high, and then from a lower high, creating a new lower low. All right.
Right. I
Yeah.
see it now.
Got it. So I know that if you're tired, it even makes it even worse because you're not thinking straight. And then if you're angry, you can't think straight, right?
Right.
So imagine if you're a shooter and you're full of anger, you'll miss the target for sure, guaranteed,
Yeah.
right? So this time, cool. Alrighty, let's go with UN. At one point in time, you can see that you're gonna press the trigger even before the 5 minutes are about to close, and lucky you didn't. And we'll see what you've done with your trade.
Okay, cool. Okay, so I picked a pound dollar, and first thing I have to check is that there's no news within the trading hour. So the next one is like in 3 hours time, so that I'm pretty cool with that. And then I just quickly checked what the DXY is doing, so it's retracing here on the 1 hour. Okay, so looking at my trade is that when I looked at this, I draw my downtrend line, and it was an uptrend line, and it was actually the level of demand as well before I entered. And I saw that buyers are coming back in, and then I saw a breakout of the downtrend line on the lower time frame. So check the 30 minutes. So on the 1 hour, the buyers are in control. 30 minutes, it was also a very good demand level right here, and buyers were coming in as well. And then on the 15 minutes, this was my first entry right here. And also clearly showing that there's also higher lows happening here. We also buyers in control. And then the 5-minute chart is where my entry was. And on the 5-minute, it was very quick. Buyers in control, as we can see here. and entered my first one here, and also after that entered also a second one here as well. Closed this position, actually closed this position first, and then closed this one here, and now what it's doing is that it's just hovering within the supply area. My target was 165, but it didn't quite get there because it's at the level of supply, so I closed everything. My target was, my stop loss was below this candle right here, around about the 151, 48, 49 area. So it's retracing, it keeps retracing. I could enter again and write this on, but it's at level supply. I'm happy with that and closed all my positions then.
All right, excellent. Question is, we're currently looking at it. First was the hesitation to close the position on the first one where it was a doji after pretty much on that 5 minutes. So it reached 2 levels of errors of pretty much supply, 51.62, 51.63, obviously with the spread as well. And then I can see the anxiousness that you're almost about to close on the red bar. So what was the thought and what was the emotion you were going through during the time?
Okay, the doji is, to me, it's an indecision. So since it's creating high lows, higher highs, I was still willing to leave the position. And then when I saw the red bar and saw it that it's, to me, it was just retracing. So that's why the next bar I bought again, because I was just confident that this will just go to the upside, and it did. And when it did, I closed the second position to this level, and then the last one, I was going to ride it to about the 165, but because we're closing, then I just closed it. So pretty much it wasn't much of a hesitation. One was, it was too quick as well in the 5-minute chart, but then I made a plan to say that, you know, it's in an uptrend, change of trend, buyers are very strong, retracing, and pretty much stuck to my plan that way.
All right, cool. And the reason why I was just saying, like, in terms of the hesitation and the anxiousness, is because I was looking at the timestamp. So when you guys are trading, I also look at the timestamp, whether if you're being aware with the current time. So in 5 minutes for Tony and for Jason, if you're entering way too early or exiting, say, if it's say 11:50, and then you're using the 5-minute time frame, and it's only 11:53. And you exited the trade, you're way too early because you still have another 2 minutes, and then within 2 minutes anything can happen, and the bar, the candle can form anything as well, right? So those are the things I'm currently looking at, and so at the same time I'm like, okay, well, I wonder what she's thinking. Said, all right, she's about to close it, but not. Okay, great, came back up. Maybe she sees as a correction. All right, then she bought more on that one. Okay, it's a continuation, blah, blah, blah. All right, cool. Thank you, Anne. Very nice.
No worries. Thank you.
All right, last but not the least, let's have a look at Tony's. I know, Tony, you need a lot of training, and maybe perhaps Anne and Jason can also assist you, give you some feedback. All right, let's have a look on what you did.
Yeah, for my trade, I put the short on the US yen.
Mm-hmm.
This is the kind of trade that I do not normally do because it's kind of late in downhill, but it also should reflect. But for this exercise, I would do it because it reflects some of my my thought process. The reason I short it from here is that it seemed to break out from this previous low. But as we see, it quickly pull back up turn into a doji, and luckily it was a downtrend. It still followed through, and then back to here. We try to back up, but usually I set my stop about 10 pips up here. But if I see that it breaks these two moving average, if you break one bar up, and the second bar if I felt like there's no chance of coming down, sometimes I will just close the trade myself to prevent further loss. One thing I find that by trading the breakout a lot of time in these past few weeks, there was a lot of fake breakout, so I end up in a losing positions. So so this is why I try to remind myself, try to enter the trade at the supply at the I guess the demand level, at the persist level or whatever, at the support level to minimize my risk. This is what I constantly need to remind myself. Also, before I put on this trade, I did take a look at the hourly chart just to get a sense of directions. And since this is a doji, so I felt more comfortable putting a short going downwards. And I try to look at the round number 9450 and 95 to get a sense of the range that is being that the chart that the price going to move around.
Hey, all right, Tony. Okay, good. Let me stop you there for now. And then, I'm going to let Anne and Jason give you feedback as well, okay? So I'll pass the presentation myself very quickly. First question, up to where, in terms of the stage, in terms of you watching the videos of the 30-day action plan or self-training program based on method 3 or the 2 in, 2 out method? Did you finish the whole lot, or you jump in straight away and looking into it without knowing the rules?
Yes, I jump into it 2 in, 2 out.
Okay, got it. All right, beautiful. So that's what I thought. Okay, just 1 second. You should be able to see my screen right now. The methodologies that basically I do have, and where Anne, Jason, and everybody pretty much in the room, there's certain rules, and cannot create different rules based on one rule. Either you follow the rules or you don't follow the rules, or else you'll be creating your own system, right? So the 2 in, 2 out it has a setup. The setup is based on an 8 moving average and a 10 close moving average. The moving average component in terms of the inner core, the engine part of that, is mainly the past 8 and 10 closes of a particular time frame divided by the closing that will create the average. Now, in the currency market, the closing price of a particular currency doesn't just stop or touch the 8 or the 10. The reason why we use the 8 and the 10, because some pairs are more prone to the 8, some pairs are more prone to the 10. So, in order to compensate for everything, in order to have that certainty, because what we want in the marketplace is a form of security, part of the certainty. And part of the certainty will create the confidence level based on the way how we do trade, and that confidence will make us execute the trade itself. And now the trigger in order for a trader or for us to actually use is that the candle or the closing price has to be 2 candles in a row above the 8 or the 10. That's if we're going long. And the exit strategy is 2 candles below the 8, the 10. There are no stop losses in this strategy, because once they cross the 8 or the 10, that means there's a change of direction of the trend. And the target points are mainly used either a fib or a level of resistance. In this particular case, since you're going long, then you need to find the resistance point, the next resistance area, or I call it the next supply area. Excuse me. Right, so in other words, if we have something, okay, here's a perfect example. Okay, let me delete pretty much everything at the moment. I don't want to do that, because then I will delete that. And one thing I liked about this methodology, yes, they go in hierarchy. Moving averages will always going to be the last of the hierarchy. And I can see as well in your screen you have a 200-day moving average. That is not my system. 200-day moving average is pretty much the last 200 part of the time frame, either days, hours, 4 hours, and whatnot. And it will create a bigger level, obviously, because it's a 200-day, it's a past 200. So that is not my system.
Yeah.
Okay. And so to make it easier, just let me just explain very briefly. It's very easy. It is an easy methodology. Okay. So this actually, I'm going to change the 2 in, 2 out. I'm going to call it the no. Actually, this should be, technically speaking, you know, Lolita is right. This is the no-brainer method because there's really nothing to think about. So if the closing price, so here we go, it's a simple question. Is the closing price, did it cross above the 8 or 10? If you say yes, it makes it objective. It's a yes to everybody. Then there's a potential entry point. But the criteria is that it has to be the second bar, 2 candles in a row. And all of a sudden, here's the second bar. Is the closing price, did it close above the 8 or 10 on the second day? If you say yes, nothing to think about, we don't need even to go to the weekly chart or lower time frame. That's all you gotta do is just to enter. And the reason why we don't go to any different time frame using 8 or 10 because the calculation will change. This is based on the daily closing price. The closing price on the daily chart will vary compared to an existing current lower time frame because this is the actual closing price of the daily chart. If we're going and using the 4 hour, the 1 hour, then it won't be the closing price because it could be, the price could be 82.35, 82.51 and so forth. So, you know, the advantage of using this methodology is that it has the methodology in each time frame. Hence, that's why you're getting to a smaller time frame, it's a little bit more of a challenge, but you get on a bigger time frame, this is where you can get more better pips. Okay, let's go through in terms of the exit strategy. Okay, first bar. First bar.
Can I ask? Can I ask?
Yes.
Yeah, questions. Do you care the directions of the moving average? In this case, it's pointing downwards.
Okay. Yes, it is pointing. It is pointing downwards. But what it means that when the price has crossed over a moving average, there is a potential change of trend. That's what it means, right? A moving average is mainly an equilibrium between supply and demand. Equilibrium meaning it's a 50-50, hence the terminology averaging. It's an average, it's a 50-50. So when a price is below the 8 or 10, that means it's on the downtrend movement, right? And then when it crosses above the 8 or 10, so here it tried to cross, but it didn't want to, it failed. It failed, it tried to, it failed once again. So in other words, it's still within the trend to the downward movement. But in order for a trend to be confirmed into the moving average, it at least should take about 2 days in order for it to confirm. So here, this is basically your, the breakout, false breakouts. Why? Because if really, technically speaking, in terms of the basic foundation of technical analysis, this is just a correction of the trend. Correction, lower low, lower high, lower low. Now the price is saying, yep, it tried to cross over 1, 2, 3, 4, 5, 6, 7, failed. 7 times it failed. 1, 2, there is a much clearer indication that the probability of this to head back up to a new change of trend that will create a new uptrend is highly probable. And so in terms of the exit, if we disobeyed the rule and if someone basically already panicked, see here, so the other question is in terms of the exit strategy, which is 2 out, is the closing price, did it cross below the 8 or the 10? In this particular case, no. Do we have to hop out? No. Leave the trade alone. Leave it. And then all of a sudden, here we go. Is the closing price below the 8 or 10? Yes, it is below the 10. Do we have to close it? No, because the exit strategy is that the second bar has to be below the 8 or the 10. 2 consecutive closes below the 8 or 10. Then all of a sudden, bingo, it went to the upside. Did the close, is it below the 8 or 10 at one particular point in time? Yes, it was. But it closed above the 8 or 10. So there's no exit strategy. You're still within the trade. You're still in the trade, leaving the trade alone. So in other words, that once there is once the closing price crosses above on the downtrend, there is a probability, a high probability that a new change of trend will occur. So if you notice here too, the closing price is way too far from the 8 and the 10. Some point in time, somewhere, sometime in the future, the closing price has to touch the 8 or 10. Because the 8 and the 10 or moving averages is simply used as both a ceiling and a floor between the price point of a demand and the supply. Okay. And then out of nowhere, second day in a row, continuation. Notice how the closing price is way too far now away from the 8 or 10. Somewhere, sometime, they will feel that, especially that gap between there. Third in a row. Is it still above the 8 or 10? Yes, you leave it. But in this particular case, it is imperative to take some profits. Hence, that's why yesterday, I'm more than happy to take the profits. In order for us to make about 40 or 50 pips, that's 50 pips is 50 pips, right? And it continued to go further, which we are at the moment right here, right? So now, obviously, you can see here I'm short with this, but it's a different methodology. It's no longer basically method 3. But notice how the closing price is away from the 8 or the 10. At one point, they have to diverge and they have to touch, and that's what they do. So to know that information, or in other words, to know the purpose and the reasons of or indicators is also very, very important. Closing price is close above, a new change of trend. So hence, a higher low, a higher high, higher low, higher high. Somewhere, sometime, we don't want to do that. Somewhere, sometime, the price has to meet with the 8 or the 10, because they have these, and hence, once again, is why all indicators are all lagging indicators, because there is nothing that can give a foolproof indicator ahead part of the close. And that is the challenging part with indicators, that imagine if only this will go and will dictate, say, hey, it's going to go through there. If, say, it's way advanced compared to that, and we'll be able to know, then that's the missing part. This is the $1 million question all the time, even a $1 billion question. Where can the price head towards to? At the moment, that's pretty much still the same, the calculation part of that. So one day, they have to converge between the closing price and the 8 to the 10. They have to feel it regardless whether we like it or not. So that is now method number 2 in order to go to the upside. How about now going to the downside? The downside is the same rules. Okay, once a trend, say here, higher highs, higher lows, higher high, higher low, higher high. It is in an uptrend, no doubt about that. Is it objective? Absolutely. And why is it objective? Because the definition of an uptrend is a series of higher highs and series of lower lows. Once the price closes below the 8 and the 10, that means that the storm will be coming, that a new change of trend is highly probable. So from here, is the closing price below the 8 or 10? Absolutely. And second in a row, yes, there it is. But there's also a big gap between the closing and the 8 to the 10. Sometime they have to feel that. But if we're not just thinking, without having any type of logic, and you're just following the rules, and just imagine you're a computer, two in, two out. So currently it's in a two in situation. Enter. First day, you're at a loss. Second day, you're at a profit. See how, notice how the price touched the 8 or 10, which is at the high, because that's what the market does. They cannot just go and drop. They have to fill certain gaps. When there's a big gap, they will fill that gap. So 1, 2, it's a third and a second in a row. Sorry, it's an entry, first day, not making any money. Third day, that's the first day, you're not making any money. Second day, you're making money. Fourth day, you're making money. If you're not taking profits right now, then there's definitely something wrong there. Fifth day, so you see, it has to fill that gap. Now it filled that gap. Second opportunity, basically the market is saying, take me, close me, give me some, take some money out of me. Fourth, fifth, market is still dictating, take some. And now it's trying to fill in, trying to go above. If even you just say, okay, I'm going to close 2/3 and leave 1/3 until the 2 out will happen. Is the closing price above the 8 or 10? Yes, but do we have to exit? No. Do we have to close everything? No. Is it above the 8 or 10? No. At one point in time, yes. But do we have to close the position? No. Is it above? No. Continuation. More lower low. Goes above the 8 or 10. Do we have to hop out? No. How about this one? Do we have to hop out in order to be objective? 82.67. And closing price 82.67. So no, it's still below by 0.0008. All right. Continuation. Probably you'll be closing your position and basically say, that will do, pig. I'm happy. In order to make from 83.37 all the way down to 81.80, 50 pips. Sayonara. And then first, is it on above the 8 or 10? Do we have to hop out? No. Is it above? Yes. You're closing the position from that closing price, 83.37, say 83.35. You're closing that price at 82.65, 65, 83.35, 65.35, 55 pips pretty much. No, 75 pips to the downside in terms of the loss, even if you get pretty much on that last part of an exit strategy. So it's a very, very simple trade. There's really nothing to think about. If you could just follow the simple rules, Lolitha actually is a master of method 3. Unfortunately she's not here. She always comes in the afternoon. And for her, just following simply that, there's nothing to think about. It's been proven you can make money, right? It's not much, but good entry points. But you're getting the piece of the pie from the equilibrium to the demand. Obviously, in hindsight, the best price of selling is around these levels. Best price of buying is within these levels. But of course, it's a different methodology. The moving averages have different types. They're always coming last in terms of hierarchy. All right, so I hope that helps, and please go through in terms of the Action Taker membership. Go through the modules. I highly recommend that. Watch the videos. If you have any questions, email me. More than happy to help you out. And this nighttime class is actually very beneficial because you're using, and you see how I'm looking at your trade on a live trading environment. So obviously, 1, not following the rules. 2, you think too much. Okay, if you're thinking too much, you'll have big problems. So say for Jason, on the other hand, the reason why he lost is he's tired, and there's definitely also deficit in there that I need to coach him and him to learn more in order for that. With Anne, she's advanced. She sees things based on method number 1, and hence that proves that she knows what she's doing based on the methodology. So, we're here for you, attorney. Okay, it's why sometimes it's best to get rid of what you know now, like from in the past. Maybe that didn't work. Just follow what we're doing here, and give it a shot. Like I said, for 30 days, that's all you got to do. If you like it, stick around. If you don't like it, then that's okay too. Because the rules are very simple. And then once you've mastered method 3, this is method number 3. Then we go through method number 2. Then method number 2. Then later on, we'll teach you more method number 1, which is the buying at wholesale prices, buying on demand, selling at supply. Alrighty, well done, guys. Today, any feedback for everyone, and Jason, for Tony?
Yeah. Leonardo, I have one more question.
Yeah.
Yeah, I like this method, but sometimes I do not know. Is there a scenario that it cannot be used? For example, like if you're looking at this chart on February the 6th, if around the February the 6th, if you use this method, then how do you know during this time frame is not the appropriate use of the method?
Perfect. Great question. The trend. So see how higher high, higher low. Notice how from there it's too far. It didn't want to perform. This one didn't want to perform. Notice how the lows didn't want to continue. Below the lows. No good. A much better scenario is, see here, there's a change. It's definitely a change of trend. So from that perspective, didn't want to supersede to go beyond here. So look at the highs, breaking all the highs, right? When there's 1 or 2, and from here, from this point, and in a level of demand where it's still in an uptrend, then no go. So these are pretty much the tips later on. Once you get familiarized with the actual rule itself, first is, I need to see if you're following the rules, and then later is to go through more specifically the in and outs of moving averages and why it does that. So if you see there's a gapping, they have to fill those gaps. But on an uptrend and you're using this, it will fail. You can make money, but here's another opportunity, but no, that is it. So here, this is a much better area because it's too close within the 8 or the 10 itself. I prefer this price compared to this. It is way too, the other one is also way too far away from the 8 or the 10. It is a much better, because at one point in time, I was tell students not to chase the marketplace. So even here, there's a really good entry point, but it's also too far from the 8 to 10. So as part of later on of the techniques and the tips is that you need to wait for the price to come back up closer to 8 to 10, and then you short it. So this is a much better entry. But if it's something like this where it's too close with the 8 to 10, it's just too good to be true. You just have to basically enter without hesitation. The closer, the better. But the further out, not a good idea. So, but we can talk more about that later on, sometime in the future. So, for now, just baby steps. Practice first into a good exercise as well as go back in the past. You go through there. Okay, without thinking is above. Yes, to enter. Way too far though. Can I get a better price? Absolutely. So, can get a better price to there, but if it doesn't want to, it goes way beyond you, then it's already way too far. So first is just follow. 1, 2, enter. 1, 2, 3, 4, 5. Probably think I'm getting some money. Exit. Short. Exit.
Yes. Yeah, I did try. Yeah, early on I did try to use this method on the euro dollar. I mean, for the last many hours, it kind of just goes sideways.
If it's going sideways, don't enter, don't use it.
Bring up the,
okay. So If you're using the methodology as well on a really, really shortened time frame, like 5 minutes, you don't have much room to make money on because remember, it's an equilibrium. See, if I go through high, any
On
form,
the hour chart. Yeah.
so just to explain briefly, see you're on the midpoint, you're using a midpoint 45.53. That's 8 pips. So there's nothing that you can basically make money on. Let's go through 1 hour chart. 1 hour chart, even better. But a 1 hour chart, see, that's your entry point to go short. Here's some opportunity from there. If you entered 28.50, 28, low 36, say 28.40, 10 pips. So there's no consolidation, stay away. Because consolidation just means the poor uncertain. They don't know where to go. Don't touch it. Much better movement is when you will see better usage of this is, let's say, at 1 o'clock or 2 o'clock in the morning, 5 o'clock in the morning, 6, 7. Like there's some form of good movements. And when there's consolidation like this, that's still a lot of uncertainty. Hence, that's why today, I mentioned to you guys that it's a nice methodology in terms of method 1, but I'm staying away because there's still some news that's bound to happen overseas. We don't know what the news is going to happen. As far as concerned, sellers are in control and it's what keep on tanking. So stay away. If there's a lot of reporting, a lot of news, don't trade it. Go different pairs that don't have any news, or if there will be news later on during the time. But if there's too much news, what's the word I'm looking for? Where people are really looking into something, like say the Cyprus event, right? Then don't trade. Don't even look at it. Especially if it's going to be a consolidation type. Yeah, forget it. Don't trade it. There's not much room for you to make money because no one's buying, no one's selling. There's no volatility. All right, so these are the things that we'll talk more in due course, Tony. All right, so
Okay.
let's wrap it up. Other than that, well done. Any questions, Anne or Jason?
No questions.
No questions.
Cool. All righty, guys. Jason, we'll see you tomorrow at the Trader Dojo. Other than that, the rest of you guys, you have a good night, good morning, adios, goodbye.
See you.